Welcome to Talking Markets, and this is a UK election special. And I'm Michael Wilson, and I'm joined by my good colleague and friend over all these years, David Buick.
Old-fashioned look there.
And Simon Nixon joins us again, whose tour of duty includes the Times, Wall Street Journal, and you've also got your Wealth of Nations website. I know that we have covered a lot of this ground before, but we are a few days on from when we last spoke, and I'm just wondering whether things have crystallised very, very slightly. What do you think the expected landslide for Labour? Actually, who should be worried?
Well, I think it's quite clear that the Tories have thrown in the towel. I mean, the cabinet minister essentially saying it's over. And we had this poll last night, quite extraordinary poll, suggesting that Labour is going to have a majority. I think it's 383, and the Tories will have 64 seats, 3 more than the Liberal Democrats. I mean, so it does seem as if the Tories are now in a fight just to be the official opposition. It's clear from the demeanour of the Conservatives that this is going to be an absolute, obliteration, annihilation event for them, isn't it?
Do you feel as though Labour has it within themselves to this crucial question of driving growth and productivity?
Well, I think as we discussed the other day, I think they have more of a growth plan than any other party in this election. I think that they've sort of honed in on the single biggest obstacle to growth in the UK, the thing that's held back productivity and investment for years, which is the planning system. They have some good ideas, which I think will make a difference on housing, which is obviously an important area, including top-down targets for councils, releasing grey belt land, i.e. land in the green belt that really isn't very green, for development. I think these are sort of sensible measures, but as we discussed here, I'm very encouraged by what they're going to do on infrastructure, which I think is where the key need is. The Tories totally failed to update the national planning statements, which are key for the fast-track planning system for a decade. The Labour will say they'll do it in 100 days. They're going to update all of them. And crucially, which I think is also very good, they're going to include as nationally significant infrastructure things like laboratories, data centres, and other digital infrastructure, which I think is important too. So I think they've got the elements of a growth plan, but there are other things that they have which will count against that, which will make it difficult, I think.
I don't think it matters which political hue you are. Everybody in this country, I hope, would want the government to be successful because we'll all benefit by it. But to me, there are 2 areas that are slight cumulonimbus clouds as far as I'm concerned. Is one, everything that you've laid out about the plan, which I think is so important. I'm still not convinced that that alone will attract inward investment. And I'm not certain inward investment has been given the encouragement to actually do that. And the other thing is taxation. Sir Keir Starmer and Rachel Reeves have been utterly clear that the working man, whoever he or she might be and whatever level that may go up to, will not be inconvenienced, and we have no reason to doubt them. But I don't think whether it's Tory or Labour, I simply do not believe that the fiscal disciplines which both parties said they will do, that there is enough money in the bin to actually deal with all these wonderful plans. And I'm not being sarcastic, I actually think it's important. It means, Simon, higher taxation must do.
Well, 2 things there. Firstly, you mentioned inward investment and capital growth, and I have to say, I mean, I think that the planning bit is one piece of the puzzle, and it's not the full piece of the puzzle. We've talked before about the stock market, which trades at a deep discount to Europe and an extraordinary discount to America. I think that is a reflection of the global sentiment towards the UK economy. It's not been discussed in the election at all.
Avoided, I would always say.
Completely avoided, and yet it's a fundamental verdict of the markets on Britain as an investment destination. And so infrastructure is one part of the piece, but actually what that is signalling, and I have to say I've got essay that will be coming out next week for Prospect magazine, which looks at this in some detail, but I think that is a verdict on our economic model fundamentally, which has not been addressed, and our inability really to produce world-class companies of size and stature and global significance, and that I think is it's a real problem, which I don't think anyone has addresses. On taxation, I think that's part of that piece. I totally agree. I don't see any way that Labour doesn't increase taxes.
Well, Tories wouldn't either, would they?
And the Tories will have to too. And I think that that they've boxed themselves in by ruling out the main levers. I do think I would love to see a real overhaul of the tax system, which is incredibly complicated. George Osborne, do you remember George Osborne?
I do.
Before he became into government, used to say he wanted flatter, simpler, fairer taxes. And at the time, there was this thing that Gordon Brown had created all these endless new tax rules, and it was a huge drag. Well, the Tories sort of doubled the tax code since then with endless marginal rates through the system. So, I mean, there may be quite a lot you could do, just trying to sort of reform the tax system. I'd love to see that. She's not talked about it. But I think that the danger is that they have left themselves with very little option but to tax wealth. And I think that will, there's certainly grounds for taxing wealth more in Britain. We don't tax it probably as much as we should, but there's a danger that in taxing wealth you drive capital away, and I think that will be a problem.
Do you remember the consumer? Do you remember the shopper? Remember the price of living, cost of living index, and all the rest of it going up? And yet we could be facing a couple of interest rate cuts before the end of the year. It could be that consumer confidence rises, so you could begin to paint a rosier picture of the UK economy right now. What do Labour need to do you think, to ride that wave if it indeed were to happen?
Well, I think yes. I mean, certainly the OBR, Office for Budget Responsibility, has in its forecast, it's forecasting average growth of about 1.8% a year for the next 5 years, which is quite a lot more than independent forecasters, and quite a lot more than the 1.3% a year that we had sort of over the last 5 years. So I mean, in a sense, already baked into the fiscal forecasts is stronger growth, but I think that they may well be lucky, and it will give them some headroom for a bit of extra spending. But but even so, I don't think one of the challenges we have in Britain is we spend too much of our income on consumption, and we don't save enough, and therefore don't invest enough. We therefore rely on foreign investment for saving. I mean, I think one of the challenges we have is actually we need to save more of our income, and but that's something that nobody wants to discuss.
And also, to pick up Michael's point, to think, and you're right, but we've had relatively discouraging vibes from Madame Lagarde last week about the European economy, that we may get stuck towards the end of the year, and also the same case in the United States, where you wouldn't exactly describe Jay Powell as doing backwards somersaults in enthusiasm that the US economy is going to select another gear.
I think that's right. I think economists have always warned that the last mile on inflation is going to be hard. When you've had that big a cost of living increase, the pressure for wage rises to compensate, especially when unemployment is very low and there are labour shortages, is high, and so these interest rates may stay higher for longer. I've always thought that they probably would.
We have very, very large. Just continue your thought about, and David mentioned Europe and mentioned the United States as well. I mean, we do need to factor those kind of things in, don't we? It's not just about the UK. It's about our relationship with the United States. It's about our relationship with Europe. We don't know a great deal about that right now, do we?
No. I mean, it's
and Putin as well, of course.
Yes, of course. Yeah. Well, I mean, the one thing we can be sure of is that there will be big external shocks, and Britain as an open economy is, of course, going to be very open to them. I mean, for what it's worth, I think that the Eurozone has an issue with lower growth. I'm not convinced that we're on the brink of a new Eurozone crisis that, as we were in, say, 2010 to 2015, which was a big drag on growth.
Crisis, yeah,
I don't think that what we're seeing in France right now is that sort of event or anything close to it. I think the bigger issue, the underlying issue is the one of interest rates and there. But we are obviously, we're a open economy, and so we're going to face these shocks.
One of the things, Rachel Reeves gave an interview yesterday to Johnny Prynne and Nicholas Cecil of the Evening Standard, saying that she was very confident that she would be able to go to the European Union and get better understanding and more, I think, joint regulation as regards financial and professional services, which would be to the benefit of the City of London. I can't see Europe doing anything now for out, can you? Or is that just being a bit too cynical?
I know. I'm quite sceptical too, David. I think I don't think that the EU has huge challenges right now. With its own single market and competitiveness. Mario Draghi is about to produce a report on how to revive the competitors of the single market. They need to deepen their market in capital markets, defence, digital, energy. So, I think there's a limited appetite in Brussels for a new negotiation with Britain. It's well down.
Bottom of the old agenda, isn't it?
Totally the bottom of the agenda. As far as Europe is concerned, this relationship is fine. The trading relationship is fine. It's working well. So, it's not clear what Labour has to offer. It'll have to have something to offer in return to get more access and to get these deals. So even if they can get some agreements, I think there will be marginal impact. And certainly, as far as the city is concerned, it certainly won't stop European regulators doing everything they can to try and pull business back on shore to the EU and to the Eurozone.
Let me take you back to the piece you've written about the stock market and the London stock market. We talked about it being undervalued. We know where the money is and all the rest of it. The last time we spoke, you weren't that unoptimistic, if I can put it like that, about equities. How do you feel right now? Do you feel any change, or does Securonomics, does that do it for you?
No, I don't think the election has a bearing in the immediate term on the stock market.
Not for a year, does it?
I think the election, the market responds to incentives, and at the moment the incentives haven't changed. The challenges in the economy haven't changed; remain the same. So the election doesn't change anything in the near term. It'll be the decisions that Labour makes that will, sector by sector, have an impact, and will also change that. Maybe will have an impact on the perception of the UK economy. But my view is that the UK's underperformance is a verdict on fundamental issues with our economic model, in terms of its ability to generate scalable global businesses that are, attract attention. And I think that's
on an international basis.
Yes, and I think that's a weakness. We haven't had a single IPO for a couple of years now that has raised more than $100 million.
Just the one that was the Raspberry thing.
But that was 100. I think it was 110.
Yes, it was quite never the total value. You're right.
But it's really
small beer.
So we're and there's very little in the pipeline that's going to be anything even more than a couple of billion, really. So
I doubt Sheen will happen. Do you?
And would you necessarily want it to?
No.
I think it's it's clutching at straws, really, and I think it could actually do reputational damage to London. So I don't think I don't see anything in the election itself that would change the perception of UK equities. I think we'd have to wait and see the decisions they make when they make them.
I don't know, but maybe I attach far too much credence and importance to sentiment, but I think sentiment is actually very important. And the one area that slightly worries me, because the plans, as I understand them, Simon, are incredibly bold, and I don't say they're wrong, is energy, and particularly green energy. And Ed Miliband is quite an excitable character, and he can easily run green and come off the bridle quite quickly. And he's been warned by Shell saying, you know, we are still an extremely important element as regards to the energy prospects that we have going in the future. You only look at somebody like BP, you say, I'm profoundly, and perhaps you could put me right, profoundly against the windfall tax. I think it's political, not economic, and I think it's stupid. For the simple reason that BP, I think, pays 10% of its profits, earns 10% of its profits in this country. But then you get other companies like Harbour Energy who pack their bags and say, all right, you're going to be like that, we're not going to do it in the North Sea, and we're going to Nigeria. And it's just insane.
I have to say, I agree. I think one way you can tell that Labour is aware that they've got a problem here is that we've not seen or heard from Ed Miliband throughout the entire election campaign, as far as I can make out. He's been locked in one of his kitchens somewhere. You know, no, I agree. I mean, capital goes where it's best treated.
Yep.
And I think that when I said earlier, I think there are elements of Labour's manifesto that cut against growth. I think there's some good bits, but I think there are two things that I think cut against growth, and one of them would be the plans around North Sea. I mean, yes, it's a declining industry, it's a small industry, but I think, I agree. I don't think taxing capital is the way forward. I mean, if you can, there's one thing to tax wealth, but it's another thing to tax capital. That doesn't seem sensible.
Does it worry you that there are some wealthy people who are saying, if Labour get in, I'm off? I mean, we know that they are a relatively small part of the total
I read the survey
party.
the other day with endorsement with Michael, said that apparently what you call rich and what you don't, but I'm told there are 60,000 quite rich people in this country.
Yeah.
Which doesn't sound a lot, but in point of fact, the amount of money they've got is very important. I mean, Peter Wood of Direct Line put his hand up the day before yesterday saying, I might have to pack my bags and go elsewhere. And I know of other people who want to talk about this. I mean, where do you pitch it? Taxing wealth is, those who earn more have got to pay more. I mean, we know that. But there comes a point when people say, do you know what, I'm not doing this anymore.
And just to tie in with your previous point, doesn't do a great deal for the public perception of confidence, does it? If you get leading business people saying, I'm off.
So, when I said there were two elements of the manifesto that I thought were anti-growth, this was the other one. This was the other one. The private equity and the non-dom taxing, which now I have slightly mixed sort of feelings on this, because 15, 20 years ago, at the earlier stage of my career, I wrote quite a bit, was horrified to see the scale of, or the extent to which the non-dom rules in particular, and the private equity rules, were being used to enable some absolutely enormous fortunes to be amassed in London by people who were paying a fraction of the tax that I was paying on my meagre journalist wages. Yeah. And it wasn't a sort of resentment thing. No. It was more that we had created this financial services industry, but on the basis of London effectively being a tax haven for the world's rich. And I think that the more successful London became, the harder that was to sustain. And we did have a situation, and as I say, back in 20 years ago or so, I wrote quite a bit about it, and I'd like to think had some bearing on the rules being changed. But for example, you had a situation where Europeans were coming and having these ridiculous dual contracts where they pretended they were working 3 days a week in Paris, and then they were just using the non-dom rules to have their bonuses paid offshore, and they were essentially paying tiny amounts of tax while being the biggest earners in London and taking advantage of all the services that London had to offer. So there was an unfairness issue, and I think actually that on the one hand, we underestimate as a country the extent to which being a tax haven became our economic model. On the other hand, the resentment that was fueled by that, I think led directly to Brexit, and to populism to a certain extent.
Also, I mean, the element from Russian oligarchs was enormous at that time.
Yes, and the Russians.
And they've gone.
Yes,
largely.
But there was a need in the case to tighten things up. Now, of course, the issue is that that every country, now has some kind of generous regime to lure back their own nationals or to encourage rich people to come to their own country. And the danger that we've now got is that we have now become really quite unfriendly, or about to become extremely unfriendly, to bits of to wealthy people who are quite an important part of our economic model. So I think there's a calibration problem we have now, and I totally, I've certainly heard it from around the city. I think there's a real danger now that important parts of the city will now disappear offshore.
Surely there are enough intelligent people within the new Labour government to realise that you cannot throw the baby out with the bathwater.
So they have said they're going to bring in a new regime, and and they will clearly, I do think, the one thing I do think is that they do seem to understand at some level that their success will depend upon how they're seen by capital and foreign capital. So you would like to think that when they're designing their new regime, just like when they're designing their new rules for the employment law and trade union rules, they will listen, because they'll need to. But so I think a lot will depend on what the new regime is like and how they market it and advertise it.
If you were to take an international view, I mean, again, let's paint a rosy picture. It could be that the UK is a centre of relative stability, never mind what your particular politics are, amidst a lot of big change in them. And if you remember, years ago, there was, when Thatcher was running, there was this supposed wall of money, wasn't there? Do you feel as though there is a similar wall of money? Because there are plenty of emerging markets, emerging nations looking to invest somewhere. Do you think that they are waiting to see what happens, and then there is a wall of money heading to the UK, or is that somebody's? I read that a couple of days ago, and I thought, well, possibly.
Well, so again, I mean, I look at this a little bit in this essay I've just written, but I do think that one of the things that comes through when one looks at the 80s, because obviously that was a critical moment,
absolutely,
is well, firstly, is how accidental it all was. Really, Thatcher didn't set out to liberate the city. She set out to try and revive British industry. In the process, she killed British industry, but revived the city.
Well, and just on that point there, I mean, to me, going back, bearing in mind that I am older than God and I've seen most of what you guys haven't seen at all, but the most important thing that's happened in my lifetime from a political and economic standpoint was the abolition of exchange control. It just turned the whole country into a positive think tank.
Yes.
And from there on, things developed. We don't see, I can't see anything that happening like that again.
No, so I think that was a moment in history. I agree. That was
much more than Big Bang, in my opinion.
Yes, I mean, and actually, I think that the three key things were exchange controls, Big Bang, and privatisation.
Yep.
But none of them were done for the benefit of the city.
No.
In fact, the abolishing exchange controls, the expectation and hope was that capital would flow out of the country, not in, because they wanted to weaken the pound at that point, which was being boosted by North Sea oil, which had just come on stream. But it was a huge moment because capital came in into the country, and because it was one of the first places it could come into. But we're not in that situation now, and capital is very mobile internationally, and what we don't have anymore in Britain, which we sort of did then, is a big pool of capital of our own because capital attracts capital, and we don't have that big, stock market of interesting and exciting companies. So we lack a bit of a USP at the moment. I think that's the issue. What is the thing that's going to? What are the opportunities that's going to bring all this capital in? I think that's what we're struggling to do, to create opportunities. Infrastructure may be part of it, but as we've discussed already, there are. That's the challenge.
I think everybody. Maybe I'm sure I'm not speaking for myself, but we need to have a success. We need to have 5 good years. Now, I can see a year's good year, but the clouds in the future. So looking at it from a business perspective, without sort of messing the gilt market up so that it doesn't go to hell in a handcart, because said, well, we're going to ignore the fiscal disciplines, and there's good borrowing and bad borrowing, and good borrowing is capital creation. Where do you think we can really see something positive for stock markets or for SMEs? I mean, housing's got to be one. If the Labour government is successful in stopping this hold-up with planning operation, and they can actually say, sorry, you've had 6 months to think about it, that brown land there just outside of Chester, sorry, that's going for housing, and so in the Greenbelt, which can be done if the legislation is there. Apart from that, I mean, I'm very keen on fintech, and I'm very keen on other areas of modest manufacturing, of very important add-on businesses. Where do you think we can really contribute? What sectors do you think we can really contribute?
Well,
it's a hard question.
Yes, well, I slightly looked at it a different way. I've just published a piece on Wealth of Nations on my own Substack just this morning, and which I sort of do an analysis of where I think, what the possibilities are for Labour. And I think there are sort of really three. We don't know really what a Starmerism is yet. And actually, as we're just discussing, Thatcherism isn't what she set out. It was something that, it's applied with hindsight to a set of reactive policies. So we don't know what Starmerism is. I think there are three ways it could go. One is that he's the man of the left who once edited a Trotskyite magazine and was in Corbyn's shadow cabinet, who dreams of building a new Jerusalem, and who turns left, lurches left, and seizes this opportunity to do good red things. So that's one option. I don't think that's likely, actually. I think he's purged the party.
Too pragmatically.
I think he's purged the party of left-wingers. There's no mood in the country for nationalisations and subsidies and protectionism, and he knows that will drive away capital. It's not, Rachel Reeves is highly orthodox, so she's not going to, I don't think,
go down that avenue.
So I don't think that's likely. The second option, which is the one I would like to see, and I've written a lot about this myself, but is Labour does what the Labour Party in New Zealand did in the 1980s, when they inherited a total economic mess, which is they just embraced radical supply-side reform, radical economic reform, and at the core of it was they moved to a accrual-based accounting system throughout the whole country through the government, and they targeted net worth, and they looked at the government balance sheet, and they aggressively looked at how they could make the government more efficient and generate more income from public assets. So I would like to see her take that sort of approach. This National Wealth Fund, which is a sort of tiny little thing that's going to invest in new private partnerships, I'd like to see a real national wealth fund where you put all the assets of the country, public assets, the properties and the businesses and data in there, and say, right, let's get a really crack team to manage this wealth properly for them. So that's what I'd like to see. That would be a radical approach. Unfortunately, I don't think that we're going to get either.
It's a lovely idea, but
I think what we're going to get is what we've got from Starmer till now: very pragmatic, cautious, reactive, and that could there's opportunities there to reform the public sector, and which could be very successful. But the danger is that reactive will cause disappointment, and we're very vulnerable to vested interests, as Britain has historically been.
Shall we let this man get off to his ballot box?
We'll get him get off to his ballot. I want to ask him one more rather naive question. Does something that clearly worked for a population of 4 million, would that work for 66 million?
Well, yes, I think it can do. I mean, we have, in the sense that this wouldn't be just necessarily at a national level, but we have, cities like Birmingham that have gone, currently bankrupt, but but which have huge assets that, properly managed, could be better run. So I think there are opportunities to run the state far better and more efficiently, and there may be elements of that. Wes Streeting has talked a lot about NHS productivity. There may be that in all this, the necessity, will be the mother of invention, and they will find innovative solutions that will, tackle these long-standing issues. But as I say, I don't think it will come from a kind of program. It will be reactive and pragmatic.
Simon, thank you very much indeed. Very, very, very nice to talk to you. Very, very good.
Vote sensibly.
Always do.
Lovely to see you, Simon. Thanks so much.
And that's it for this special edition of Talking Markets. Do join us again.